all eyes on the Fed and the decision there. The markets still are really chomping at the bit for a rate cut. And even though largely those expectations have moved on till summer, do you think that perhaps the expectations are just too high?
I think they might be a little high, but usually these things don't, go the other way. I still think you have that rate cut. Consensus on Wall Street is to get 75 basis points somewhere in there. So equity investors are going to hold tight until they find out what the truth is.
A lot of experts are looking at what the inflation data is telling us, conflicting labor market reports coming out, and thinking this may be a rather boring Fed, that we may not hear much in terms of departure from Jay Powell. What's your expectation?
That might be a good thing. We've been in such a low interest rate environment for such a long period of time. To be higher for longer might actually be, something that weans us off the zero interest rate policy that we were in before. So you can spin it that way. I tend to think the higher we keep rates for the longer before we start cutting them, they're only going to cut for two reasons. Things are either going very bad or things are going right according to schedule.
All right, we've seen the rally broadening out past the Magnificent Seven, some pullback with Tesla, some pullback with Apple. Where are you putting your clients' money this week?
Yeah, we're staying, look, we're long-term disciplined investors. It's not like we're making big trades here on the week-to-week basis. Equities remain strong. I do like seeing that rotation out of the Magnificent Seven into that broader equity space. But I also view that there's opportunities, at least later on in this year, when it comes to fixed income. If we do see rates go lower, we expect appreciation in fixed income, and we also enjoy the higher yields that we're experiencing right now.
Are there particular sectors or industries that you're focused on right
no,
now?
we're pretty much passive index investors. We take a broad view of the market and try and capture as much as we can.
What about Bitcoin? I mentioned that we had seen the all-time high last week and then a really dramatic 7% drop overnight. For those who are invested in Bitcoin, is volatility just part of the game?
Yeah, it's a huge part of the game. I've been holding on to Bitcoin for over 10 years, and I can't even describe the number of 50+% drawdowns that we've gone through. So if you're going to buy Bitcoin, expect volatility. This is definitely a risk-on asset, but it's very interesting days ahead. We got the halving coming up. Obviously, institutions getting involved with 9 ETFs now have been largely responsible for this rally. You love to see it. It's very exciting, and we'll continue to keep our eyes on it.
And finally, we got a lot of data last week on inflation and on consumer sentiment. Where do you see the American consumer right now?
Yeah, I mean, their appetite for spending is still there. Inflation hasn't, gotten to that 2% level that the Fed really wants. We had a not necessarily very hot CPI or PPI print last week, but wasn't below the 3% that the Fed's looking for, hence rates probably sticking around on the higher side.